Happy Friday, everyone. It is at 9 a.m. Eastern U.S. time on Friday, the 13th of October, 2017. Friday the 13th. Are you superstitious? Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So I'm looking at the overall market stance. The CPI came out about a half hour ago. It was worse than expected, came in at zero point 0.5 versus zero point 0.6. X food and energy came in at zero point 0.1 versus zero point 0.2. So inflation's coming in lighter than expected year on year, 2.2 versus 2.3. We saw the Treasury shoot higher from 125 from 125 and 1 to 125 and 25 and a half. So about a 24 and a half tick rise there. We also saw the US dollar swing all the way from the high of the session all the way to extending the low to what looks like right now an excess low in US dollar basket on the futures on ICE. Retail sales came in also weak at 1.6 versus 1.7. Retail X autos came in at 1 versus 0.9. What this is saying on the CPI is that with the U.S. dollar move, it's saying that the probabilities, the potential for the U.S. Fed to raise rates is slightly lower. The inflation is not coming up as it needs to in order for rates to adjust. And then this morning we had the earnings from Wells Fargo, which were in line with revenue coming up short. And then Bank of America came in stronger, 48 cents versus 46, with revenue coming up $100 million shorter for the quarter. So that's how things are shaking out. My overall quote board is showing that everything is green except for the DAX, which is down only 3 points from yesterday's settlement. The Euro stocks, the European markets were weak until about 3:30 a.m. Chicago time, 4:30 Eastern, and it started to move up. And we see that the S&P moved up in sympathy and has pushed new all-time highs on the overnight session. We'll see what the day session does with it. The overnight session in the ES has pushed to 25.50, about 2 points higher than the prior all-time highs. So that's how things are shaking out. Looks like allocation is to risk, although the treasuries are and the euro and the yen are higher on that inflation number. Kind of a messy um, play all across. So, with that being said, I want to remind everyone it is like Friday. It's really, really important for you to take a moment, doesn't cost you anything, to hit the thumbs up button today before you leave. So please do that at some point. Find the thumbs up on YouTube and hit it just once, and that helps me out a lot. So let's take a quick look and review what we expected yesterday versus what we got. Yesterday, oop, no, this isn't the one. All right, so these fell out of order. There we go. Primary hypothesis yesterday is that we would most likely get a sideways day with the close of Wednesday. We would likely get a sideways day, a test, and getting stuck around the 2549 MC point of control, and the highest, which is the highest volume area. You can see from the profile here that a lot of the volume that has traded is in that area. The expectations we would get tangled up. What I wrote yesterday is that it's likely to get stuck at the point of control. There's a lot of volume that went off on that point of control. I discussed that a little bit at length yesterday. So that's likely to shut the door down for buyers initially. and then I expected it to not get beyond the prior day's low. That's basically what happened yesterday. It happened in a kind of a different configuration, but overall, that is exactly what played out. The secondary hypothesis was for the market to push higher into that point of control, reject, which is what it looked like at the beginning yesterday, and then have an impulsive move into new all-time highs. We didn't get that, and then the third scenario, as I'd like to remember to call them now, the third scenario is is for to attempt to push towards that point of control, fail, and then pull back to the opening swing and then continue lower with an extended target in the 25-35 area, which again would give us the highest opportunity. The VIX fell yesterday. It's been falling for 3 days since Tuesday from about 10.5 to yesterday reaching almost 9.5. So things are very, very slow. Still, here's what actually happened. Let's get this out of the way. I'm going to talk about the notes for a minute. Here's what actually happened versus the hypothesis. There it is, open auction. And then we pushed right into that point of control and we fell right off. The overall trade has took place from the point of control like I drew. It didn't even get to the low of the day. It pushed down into the prior day's low, um, but we didn't accomplish very much. A very strong participation on that low. Yesterday had a neutral day. We broke the IB high. We have broke the IB high, and then on the close we broke the IB low. So overall, sideways balanced. Yada yada, same thing over and over and over again. So that's where we stand. The overnight session gave us. Let's see, where's the overnight chart? There we go. The overnight session gave us a very quiet open into the Asian session. We had a profile that was basically with high kurtosis right at the low. And then at about 3:30 or so, right here, the market started turning up and has been rallying since. And continued to rally through the CPI numbers, if almost as if the Europeans had anticipated a low, a miss on the CPI and expectations for no rate hikes, which helps these equities, right? The rate hikes increase the cost of borrowing money, which increases the cost of doing business. The volume, 148,000, is pretty good. It's above the point of control. Some pretty good participation in the overnight session, and the overnight session also had about 8.5 points of range, which is also pretty good. So it's all just leading up to the market buyers stepping in and pushing the market higher. We've taken out the all-time high that was set on the 10th earlier this week. And here's what the 10 years did as a result of the release this morning. There's your CPI release, and boom, the 10-year futures they push right up, and that's basically a vote or a trade against higher yields as the cost or the price of the 10-year goes up, the yield moves in the opposite direction. So that's how things are rolling. Also, we see the same in the Bund. Here's the Bund. Excuse me one second. The Bund pushes through, pulls back to the IB high, consolidates while the indices are rallying, and then shoots straight up on the CPI release as well. Okay, let's close those. Here's what we've accomplished for the week. It's important for us to keep an eye on it. The US dollar index. There's the US dollar index. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05. 1.05
it opened up here. It opened in this at this blue dot right up here, and it has traded all the way through the entire range lower. The US dollar keeps dropping. The US dollar index keeps dropping, and today's action is in line with that. And where is my weekly market profile chart for? There it is. Here's what we've accomplished for the week. Okay, the way to look at this is we've had a stretch up and we've had consolidation all week, but we are pushing highs. We're pretty well compressed. You can see the volumes right at that 25.49. The TPO point of control is at 25.46. So that area is pretty important between 46 and 49. And you can see that that high is very, very weak. Pretty weak high up top. Very blunt, very likely to get broken. Why? Because we don't like to keep blunt or weak highs because it shows an auction that has occurred heavily at that level. And so overall, the market tends to revisit those, and that's what we're doing this morning. Okay. My expectations, still very tight on the range, forcing us to extend this. So overall, expecting an open auction out of range, expecting the market to pull back just a tad, push higher, challenge the overnight high, go sideways for the rest of the session, and then roll over into the close. Okay, that's what we're looking for. That's what we're looking for currently. And so it's overall, this is what the expectation is. I expect it to become responsive. About 80% of the overnight inventory is positive, is long. I expect that to rebalance a little bit. But I know we're going into Friday. You know, this is Friday. We're going into the weekend, and so I don't expect it to move up too much. I don't expect a trend day up or anything like that. I expect it to push higher, and then advertise prices high enough for the market to become responsive and to bring it back. I'm going to leave you with just one hypothesis or one scenario. Keep having to call it hypothesis because I've been doing that for the last 4 or 5 years. I'm going to leave you with one scenario today and let you come up with two and three and stock them. Wait for the market to look for to give you an indication of which scenario is likely to play out, and then you put your position on and let the scenario play out, um, and manage your risk in the process. There are a lot of videos that I've done that go over how I'm translating the contextual read, which I talked about yesterday. Why is context important? Convert that into a trigger chart, which looks for areas to lean against, and then put that into Bookmap, into a heat map or some sort of order flow software, Bookmap, Jigsaw, whatever. And then translate that into an execution and then use that information to manage the trade while you trade your bigger plan. Your bigger plan says if it fails, it's likely to go here. Then you hold on and then look for a discussion or look for the market to indicate where it's headed. Okay, I have a really terrible headache this morning, so I don't want to talk too long. So I'm going to cut this short here. Good luck. Have a great weekend. Don't forget to hit the like button on the way out. Thank you.